an 80-day nest of lows. Okay, the actual 80-day cycle, as you can see, is expected from the circle and whiskers, is expected to occur over here on the 4th of June. Okay, on that date. Okay, how many bars have elapsed since the last trough of the 80-day cycle? The last trough of the 80-day cycle was this trough over here in the second week of March, or first week of March. As you can see, the number of bars that have elapsed is 71. There have been 71 bars. Now, the average length across tens of thousands of stocks over tens of years in the US markets, and the Australian markets are very similar, the average length of the 80-day cycle is 68 days, 68 bars. What that means is that this trough is about 3 days late, considering the average length. Now, when a market is heading downwards, as it is currently, when it's heading downwards, you expect troughs to occur late. So one of the reasons why this trough is late is because the market is heading downwards quite steeply. Okay, so you expect troughs to occur late when a market is heading downwards. Another reason why that trough has possibly not occurred yet, and why the projection for the trough to occur is on the 4th of January, is because, as you can see, the average length of the 80-day cycle has recently been very long, okay, running at 89 days. Now, there are two schools of thought in terms of the average cycle length. Some people say if the average is currently running long, then that means that the next cycle will be shorter, okay, because ultimately there's got to be a return to the mean, and that average length is going to return to the 68 average. Other people say, well, the fact that the average is running long means that that cycle is currently running long, and therefore you would expect the cycle to be long. There isn't an absolute clear answer to that question, but what I will say from having traded on the basis or using sentence trade for a very long time to trade is what tends to happen is when a cycle runs long, it runs longer than the average, but not as long as it has been running recently, if that makes any sense. So I don't expect it to run as late as the 4th of June. I expect it to happen a little bit earlier, but later than the average length, which is no great shakes because it is already later than the average length. Okay. The most recent 40-day cycle trough occurred here in the second week of April. And as you can see, I've counted the bars from there. 36 bars have passed. The average length of the 40-day cycle is 36 bars. And the average length I've covered with a bit of drawing, so I can't see it. I think it's about 38 or 39 bars. So we're expecting that trough to form fairly soon. Okay, so that's the 20-day, the 40-day cycle trough. Is expecting to occur fairly soon, and as you can see from the nest of lows, there is the circle of whiskers. It could have occurred 2 days ago, and it is expected to occur, looks like tomorrow would be the dead center, and it could occur up to the end of May. Okay, that's the range of time that the 40-day cycle is expected to occur. What about the 20-day cycle? The 20-day cycle has been pinned to this rather unassuming trough over here, which is something that I would question, and if you were going to get into serious detail about this analysis, I would probably want to move that 20-day cycle trough. So I'm not going to take it too seriously, the fact that the 20-day cycle has been running for 20 days. But again, the 20-day cycle is expected to form very soon. So what's happening? We are expecting the market to come down and form that cycle soon, that cycle trough soon. Maybe it even formed it today. Who knows? How will we know when that cycle trough has actually formed? Well, we need to have a look at our FLDs and our VTLs. Okay, let's see what VTLs we have here, and let's see what FLDs. Okay, let's start with the VTLs. Okay, so we don't get too confusing a picture. We have 3 VTLs, okay, that are all coming down, and here you can see that VTL there, that dark pink-colored VTL, is a VTL of the 10-day cycle, and So as soon as price crosses that 10-day cycle, VTL, that would be confirmation that at least a trough of the 20-day cycle has formed, which is good enough for me, because if we have confirmation of a 20-day cycle trough, as we've just seen, we've counted the bars from the most recent 20-day cycle. If a trough of the 20-day cycle has been confirmed, then it must be the synchronous trough that we're expecting, which is the trough of the 80-day cycle. Okay, so where are those levels? Let's click for tomorrow. The 10-day VTL, as you can see, I don't know if you can read it there, is 42.53. So if tomorrow price crosses above 42.53, then we've got confirmation that the 20-day cycle trough, the 80-day cycle trough has formed. Let's move forward to Monday, which would be the 21st of May. There we go. Monday, that 10-day VTL is at a level of 42.15. So if price climbs up above that level by Monday, then again we have confirmation that that trough has already formed. See a question from Nathan. I'll get there in a moment. Let's just complete a study of this picture by taking a look at the FLDs. And the FLDs are giving us some very interesting pictures here. First of all, the 20-day FLD, which will give us confirmation of the 20-day cycle having formed, is fairly high all the way up through to the end of next week. The 10-day FLD, which is highlighted there, is at a level of 42.68. That's on Sunday. That's not of much interest to us. Monday, the 10-day FLD is at a height of 42.09, and the 5-day FLD, which is very close to price, and I certainly wouldn't use that as a trading level, but the 5-day FLD, of course, we don't have a level on Monday because it doesn't reach that far in advance. But for tomorrow's trading, Friday, that 5-day FLD is at a level of 40. Let me scroll down to see the median level. It's at a level of 42.09. So only about 52 points above where the market closed today is the 5-day FLD. I wouldn't take a 5-day FLD cross, particularly on a Friday before a weekend, as any confirmation that a trough of 80-day magnitude has formed. I would let things happen over the weekend. But certainly we are expecting the formation of the 80-day cycle trough. We're expecting it very soon. Okay, and the cycles, the markets can always be surprising, but we're expecting the trough to happen very soon. Nathan says, can we expect a small peak between 20 days and 40 days trough? Yes, Nathan, you will always have a peak between a 20-day and a 40-day trough. But as you say yourself, it could be very small. So let's zoom in a little bit more and take a look at this picture here. And it's time for me to wrap up. I see I'm already over time. Here is the 40-day cycle trough, and so we've seen, according to this analysis, the first 20-day cycle already completed with a peak over there. As I've mentioned, that's a slightly dubious trough placement, but nevertheless we are almost certainly in the second 20-day cycle, and so we can see that cycle unfolding there. And in fact, there's something I'd like to mention about that. Quick sort of summary. But yes, you will always see a small peak. So the peak at the moment has already formed. That's that peak over there at the moment. Let me just point out something. This 40-day cycle is heading down into the 80-day cycle. Trough. Let me just zoom out, sorry. I'm going to make one final point which can shed a bit of light about when we expect the 80-day cycle trough. Here is the final point. Let me turn that off. Okay. All right. This 40-day cycle over here, heading down into that into that trough. What is the expected shape of that cycle? Is it an expected bullish, bearish, or neutral shaped cycle? We look at the underlying trend. Okay, the 80-day cycle during the course of this 40-day cycle is down. That's -1. What about the 20-week cycle? It is positive, +1. So again, we have a neutrally shaped cycle. All right. So that means that the peak could occur in either the first or the second 20-day cycle. Okay. Now let's take a look at the shape that has formed there, according to this analysis. According to this analysis, the trough of the 20-day cycle has been positioned over here. Okay. So and I can tell you why. It's because sentient traders are saying over the weekend something might have happened, okay, that we don't know about, because of course we can't see what happens to a market over the weekend. So here's the shape of this cycle. It goes to a peak there, comes down to a trough there, goes to a higher peak there, which is an unusually fast move, and then it crashes down. Okay, that is a possible shape for a neutrally shaped cycle. Here's the difference between those two peaks. Is not very much. There was possibly a good deal of fundamental interaction going on over there. The American markets were getting very excited in that week, the first week of May, last week of April, and so a lot of sort of fundamental interaction. Things were happening. People were saying, it's okay, we're not going down after all, we're going up. And so the markets behaved slightly unusually. So in fact, that looks like a fairly reasonable shape for the cycle. Notice, however, that according to this interpretation, we have a late peak, right? The peak has occurred late, and we have a lower trough because already prices come down lower. That is what we call a mixed cycle shape, because the later peak makes it a bullish cycle, and the lower trough makes it a bearish cycle. Mixed cycle shapes often occur, I won't say always, but they very often occur under neutral underlying trend conditions. So this analysis looks good to us, and that provides us with some confidence in the placement of the 20-day cycle over there. Let me play devil's advocate and say, what happens if, in fact, that 20-day cycle shouldn't be placed over there, but should, in fact, be stretched all the way out to over here, maybe? Let's just say that's the first 20-day cycle, okay? That means that the cycle shape then rises to a peak there, comes down to a trough over there for the 20-day cycle, comes up to a miserable little peak. Nathan said, could we expect a small peak? There's a small peak for you. It's miserable. It's a peak, but it's miserable. And then price is heading down like that over there. Now, what is the shape of this cycle, according to this analysis, assuming that we place the 20 days trough over there? This is a strongly bearish cycle. Okay? Why? Because it has a peak in the first half of the cycle, and it has a much lower trough. At the end of the cycle, prices are already lower. This is a strongly bearish cycle. Are we expecting a strongly bearish cycle? Under circumstances of neutral underlying trend, you can get bearish cycles, but I would favor the mixed cycle that we saw earlier with the other analysis, which is why I believe the analysis we saw earlier with the 20-day cycle placed over there is more likely to be the correct analysis. Okay, but this is a possible alternative. And at that, we haven't even got to speaking about trading short. Let's hope we get to it next week, because I think we are going to be needing to trade short. Expect the markets to bounce out of an 80-day cycle trough fairly soon. Thank you very much for joining me on today's Oz Trader Chat. Thank you for your interest in Sentient Trader. Thank you for your time, and I look forward to seeing you next week on our next Oz Trader Chat, and next week on Wednesday, if you can join us for the larger and later Trader Chat on Wednesday next week. Thank you very much for your time, and I look forward to seeing you all.